When the housing bubble burst, nearly 9 million families lost their homes to foreclosures or short sales between 2006 and 2014. Property values fell by 30% or more, homeowners lost $7.1 trillion, and it took a decade for most markets to recover. Today, several local real estate markets have failed to recover. Highly profitable industries, such as business development companies, BDCs, have been harmed by the COVID pandemic and the resulting social distancing to a high degree. Shares of small and medium-sized companies carry special risks, such as limited product lines, below-average financial resources, and greater market volatility than of larger, more established companies. As a result, changes in the financial conditions and market value of an individual issuer may cause greater volatility. Looking to the second half of 2021, we believe that the most significant market risk is associated with a combination of peak economic and earnings growth rates, high inflation, Fed policy, and tight sentiment. The stock market tends to fluctuate wildly. Note that the share prices of EasyJet and Wetherspoons are about a third lower than they were on 1 January. Some Wall Street strategists think it is time to buckle because today's market will look very different from a year ago. Alberto Gallo, head of macro strategy at Algebris Investment, notes that soaring house prices are a global phenomenon as institutional investors pile up property as a hedge against inflation. Financial markets have largely shrugged off recent spikes in inflation, as there are signs that they are tied to temporary factors and will subside as countries emerge from the pandemic. However, investors are increasingly worried about long-term growth because of the emergence of contagious variants of the coronavirus. As you can see, lower mortgage rates help, but they do not eliminate the risk of an affordability squeeze facing the housing market when home prices continue to rise at a rapid pace. The housing market is so hot at the moment that rising house prices could hit affordability if mortgage rates continue to fall in 2021, he said. Take this as a sign that growing housing is more affordable in the U.S. than in many other parts of the world. Low mortgage rates for most of this year have helped keep price and sales growth at a high level for the 2020s. The rise has been driven more by speculation than simple economics, but prices are still well above their peaks of the housing bubble. In the United States, the National Association of Realtors reported last week that the median sales price for an existing single-family home in the second quarter increased 2.3% to $3.5 million, the first increase since June 2020 and year over year. The Case-Shiller National Home Price Index is a popular measure of national price growth, already surpassing the peak of the boom in the late 2000s. The Case-Shiller National Home Price Index surpassed its pre-pandemic peak in 2006 and continued to rise in May. Prices are set to hit several record highs in 2021 as exceptional demand is matched by insufficient supply. Fueled by low interest rates, looser mortgage standards, and nations' unwavering confidence in home ownership, home prices are rising at record rates year after year. The UK Office for National Statistics said on Wednesday that house prices in the UK rose in June by more than 13% in the year that ended in June, the biggest increase in more than 3 years. The average UK house price hit a record high of £266,000 PS in June 2020, £31,000 PS more than the previous year. This boom has been driven by reckless lending in the subprime mortgage market, while the current boom is driven by intense demand and record low mortgage rates. The housing market recovered faster than any other sector of the economy in 2020 and is likely to maintain that pace of growth in 2021. The report shows that the market will remain strong despite the fall in home sales, as the mortgage rates climb to higher levels later this year along with rising long-term bond yields. The Standard & Poor's 500 benchmark index has risen 18% since the release of the Fed's last financial stability report in November, but has doubled since its lowest point a year ago when pandemic-triggered market panic and plunged the United States into recession. Expect stock market gains to continue. In turn, the boom in economies led to big leaps in corporate profits and record share buybacks, which strengthened market support. Higher share prices are good news, but they are not the bigger picture.